Good morning, happy Saturday to everybody. This is my first time shooting a video on this channel. A little bit about myself. My name is Festus from New York City, moved to Columbus, Ohio. I'm a real estate investor, stock market investor, and just an investor, period. I'm in long-term real estate. Right now, I'm sitting on the fire pit that I just had installed about a month ago, and I'll be going over something that I think is very interesting. So we're talking about Series I bonds. Right now, Series I bonds are at an interest rate of 9.62%, which is very, very high and not typical in this inflationary environment in 2022. You have until October 2022, until the end of October 2022 to lock this in. I was so heavily focused on real estate, even though stocks are my first love. I almost forgot about stocks entirely during this real estate boom, and I was just all in buying real estate properties, getting long-term tenants, all that stuff. But now, as the market is shifting, we find new opportunities and where to invest our money. So Series I bonds have been a great opportunity for me to put $10,000 in this inflationary period, in order to gain almost a 10% return on that $10,000. That's almost $1,000 a year. Now, some things you should know about a Series I bond is that the fixed rate is 0%, but the inflationary rate is always fluctuating. We do expect interest rates to continue to go up, and so that 9.62% return that we're getting now should be higher in the next 6 months. And just so you know, it changes every 6 months, right? So my goal is to hold this Series I bond for a significant amount of time. I may dump another 10,000 in at the start of January, because you can only do 10,000 every single year. Now, the thing about this is that you must hold it for at least 12 months. If you hold it for 12 months and then sell, you will give up 3 months of interest. It's very similar to a CD, except this one is yielding a much higher return. And the CD is a fixed rate that doesn't necessarily change for the life of the length of which you extended it for. So whether you do a 12-month CD, 3-month CD, or a 6-year CD, that interest rate is fixed on that CD, whereas the inflationary rate is fluctuating every 6 months. So that's the only difference. I do believe that on the Series I bond, you can get a higher return than you would on a typical CD, and that's why I opted for that instead. So this is just something to look into. I've told my group chats, I've told all of my people to invest in this. It's only $10,000, and this is a great opportunity to start to build more wealth and build more wealth and build more wealth. I'm not one of those guys who wants to refinance a 2% interest rate property, because I got this property in 2021. I got my other property in 2021 as well. And so, you know, with interest rates under 3%, I'm not looking to refinance. I actually like to pay it off. I understand the tax benefits and all that other stuff. I'm not interested in that. And I'm also not interested in being in debt forever, but I'm always interested in new opportunities to buy properties with debt. So I'm a mix of that Dave Ramsey philosophy, but I don't think that debt is bad. And so you'll see in other videos how I manage my wealth, how I manage my investments. And then you choose for what is best for you. How do you want to live your life? Are you comfortable always having a payment, or are you looking to not have too many payments, or half of your properties be on payments and the other half be paid off? What is your comfortability level? You understand, it varies for every single person. And so what I would like to do, this is not going to happen, but what I would like is, let's say Series I bonds were at 9% for the next 10 years. That would mean that I'm investing $10,000 every single year, because I'm trying to get that return that I probably won't get in the stock market consistently, although it's at a discount now and it can yield higher returns in the future. If Series I bonds, I always think long term. So if they were at almost 10% for the next 10 years, that means over 10 years, that's $100,000 growing at 10%. 10%, that's $10,000 a year. You understand? And so when you take that equity out, you can then deploy that, whether it be buying another property, or if there is no properties to buy, depending on the market, you might want to pay off your properties depending on your thought process, right? And I'm not going to be able to tell the future. I may say I want to do this in order to pay off my properties 5 years from now, but I may use that to buy another property because it's at a discount or because the rates are very, very low. I'm someone who wants to buy rates at 4.5%, maybe lower than that. I think that that's a good market to get in. But of course, some people would say, if you can afford it, buy it. I'm of the mindset I'm looking for a specific rate of return, and of course you're able to get that depending on which market you're in, depending on which properties provide value, depending on how you are marketing yourself. And so I do see Series I bonds as an opportunity right now. I definitely won't need to sell for the next 2 or 3 years because interest rates will not be at that 2 or 3% threshold for some time. And so as we're gaining this interest on our money, I just know that this is going to continue to be profitable for at least 2, 3, 4 years. And then when interest rates dip to about 2% and you're only getting 3 or 2% on your money, then I'll sell after 3 months, and they'll take that 3% interest that they were supposed to give me for those 3 months back, and then I'll collect my money back with all of that higher interest rates that they were given previously. And so after 5 years, you do have the option of selling without a penalty. So you will sell and you will have all your interest with no penalties, plus your principal payment. Do I think that interest rates will be so high for the next 5 years? No. And so I do see myself selling within 5 years. But if it's 5% or higher, I may keep it in there just because it's government backed. It's very, very safe. And you're making money. It's not fluctuating up and down. You're not losing any money. And so it really just depends on you. My brothers, my mom, they all understand this strategy. And for people who are getting ready to retire, let's say you're 60, you got a little bit of extra cash, you want to put money into this, I think that that's a great option for you. It'll definitely do more than some other bonds right now or some other riskier investments as you're aging and getting ready to retire. And so I just wanted to talk on Series I bonds today because I believe that it is a wealth building tool at this point in time. And it will definitely help younger investors like myself to start to make money. Now, you don't need $10,000 to invest in this. You can invest with as little as $25. And so don't be scared about the numbers that I'm talking about or what I'm putting in. Invest as much as you can for yourself. 10% on $25 is not much, but with compound interest over time, you'll continue to see your investments pay dividends to you. And that's what's most important, is that you're taking these baby steps, no pun intended with the Dave Ramsey, but you're taking these baby steps in order to build wealth. And, it will pay off. So just do what you can. I remember when I started investing at 18, I was only making $200 a year, right? Now my stocks, especially in this environment, which is very volatile, they're fluctuating between $500 and $800, almost $1,000 a day, right? So it takes some time, but as you continue on your process, you'll start to see that you're paying dividends to yourself. You're getting better. You're compounding that interest, and this money is just unbelievable how it rapidly grows for you. And so take advantage of this. You have until the end of October to lock this in, and then whatever rate is after October, we'll speak on that when that time comes. All right, thank you for listening. Like and subscribe, and have a great rest of your day.